everyone, welcome back to Wednesday Moves. This is episode 13 of our trading education series. Up to now, we are focused on structure, risk, and execution. But today, we are going to talk about something that quietly controls everything, your mind while trading. Because in real trading, the biggest challenge is not the market, it is yourself. Why most trades really fail? Many traders believe they lose because their strategy is bad. In reality, most losses come from emotional decisions. Panic makes people exit early. Greed, it makes people hold too long. Fear makes people skip good setups. The same strategy can give different results depending on how the trader controls emotions. Psychology starts before entry. Well, psychology does not begin after you enter a trade. It begins before you even open the chart. So ask yourself honestly, am I calm? Am I focused? Or am I tired, bored, or frustrated? Emotional trading usually starts with emotional preparation. What happens after you click buy or sell? The moment you enter a trade, pressure begins. Every candle suddenly feels important. Every movement feels personal. Your brain starts looking for danger. Well, this is natural, but if you don't understand it, it controls you. When price goes against you, the first reaction is usually fear. Thoughts like, what if I am wrong? Should I close now? Maybe I made a mistake. Professional traders they accept this feeling. Beginners fight it emotionally. Now, how to handle losses properly? Losses are not proof that you are bad at trading. They are part of probability. Even good setup fails sometimes. The goal is not to avoid losses. The goal is to control their size and learn from them calmly. When price goes in your favor, like when a trade starts working, a different emotion appears. Excitement, right? There's some traders close too early because they fear losing profit. Others become greedy and remove their targets. Now, both these reactions come from emotional attachment. A trading plan only matters when emotions try to break it. Following rules is easy when things go well. It becomes difficult when money is on the line. This is where discipline is tested. Losing streaks, they affect confidence. After several losses, traders start doubting everything. They change strategies, increase risk, or stop following rules. But professionals, they respond by slowing down and not speeding up. Why you must detach from money? When you focus too much on profit, you stop thinking clearly. You start trading for money instead of trading for quality. Successful traders focus on execution and money becomes a result, not a goal. Good traders think like business owners. A business does not judge success based on one day. It looks at long-term performance. Trading should be viewed the same way. Building real confidence. Well, confidence does not come from winning once. It comes from knowing that you follow your process correctly even when the result was negative. This creates emotional stability. Daily mental routine. Well, a simple mental routine helps greatly. Before trading, review your plan. During trading, follow your rules. And after trading, review the performance. This creates professional habits. Here's a key takeaway: most traders are defeated by their own reactions. Learning to manage your thoughts is one of the most valuable skills in trading. That's it for today's lesson. If this episode helped you understand trading psychology better, consider subscribing to continue learning step by step. Thanks for watching, and I'll see you in the next episode of Wednesday Moves.